Hi there, and welcome to Hardman Talks. I'm Larissa Adams, and today we're going to be talking to Richard Jeans, Hardman & Co.'s technology analyst. Hi, Richard.
Right.
Richard has produced a sector report examining the outlook of the UK technology sector, and we're here to get a feel for what his note entails. So, Richard, let's get into it. What are your main findings in the note?
Hi, Larissa. Yes, I would highlight three things. Firstly, trading news has been better than expected. Secondly, there's been a dearth of equity supply, with so many companies disappearing from the market. And thirdly, business drivers remain in place.
Okay, there's lots of little parts to unpack there. So, I guess how do you establish that trading news?
As we went into the new year, the mood was very downbeat due to a tepid economic outlook, changes announced in the UK autumn budget, and the ongoing geopolitical uncertainties. However, traditional January trading updates have been surprisingly positive. We examined trading updates and earnings announcements during the January on 104 UK tech-related stocks of all sizes. Vast majority of these are small caps, and we estimate around a third of these announcements had the impact of elevating forward earnings expectations, compared with just 1 in 9 that cut expectations. Given the downbeat mood at the beginning of January, this was very reassuring.
Okay, so let's just contextualize it a little bit. Could you give me some examples of companies that had noticeable positive surprises?
We mentioned a number of companies in the report. We would highlight Microlise, which provides transport management software to fleet operators, and recently was hit by a cyber incident. It said that adjusted EBITDA was comfortably ahead of market expectations. Another is Eleco, which offers solutions that support various stages of the building life cycle. It said that trading was ahead of forecasts, and that was despite global macroeconomic and geopolitical headwinds. And Luceco, which supplies wiring accessories and EV chargers, LED lighting, and portable power products, it said that results were ahead of expectations, with strong demand in the final quarter, and was well positioned for future growth. This pattern has actually continued into February, with positive updates from Maytech, Pinewood, and Alexa.
Okay, there's some great examples there. Let's just switch gears a little bit. So, explain your analysis on equity supply.
Yes, we identified 21 notable tech sector buyouts since the pandemic began, with an aggregate value of around £46 billion. While some 28 tech and tech-related companies have been admitted to the LSE markets since the pandemic and remain listed with an aggregate market cap of around 10 billion. So clearly there's been a massive shrinkage of the sector since the pandemic began, but the technology sector remains a crucial part of the UK economy. Digital transformation and artificial intelligence are the obvious key drivers. I would also mention cloud computing and cybersecurity. The US big tech companies dominate the AI supply chain, or the stack, as they say. So UK companies will need to work with them to deliver AI solutions. And we're seeing a number of UK solutions providers partnering with the likes of Microsoft and Amazon, which dominate the cloud space.
Okay. And overall, how has the tech sector performed?
The tech sector was swept up during the 2020 and 2021, as the economy was flooded with liquidity during the pandemic, and this substantially outperforming the rest of the market, the broader market. But it fell back when inflation surged in late 2021, 2022, as interest rates were tightened. The impact of this was to cut off the access to equity capital for many companies, resulting in some companies disappearing from the market. But the capital markets gradually reopened again as interest rates came back down, and that enabled companies to raise equity finance. We believe that as we gradually come out of this tough environment, the remaining companies are going to should come out stronger.
Okay, and what are your thoughts on valuations across the tech sector?
We think the ratings look attractive, particularly if you compare with the sky-high ratings across the pond. Among small-cap software services companies, the average EV revenue multiple is on our estimates is around 1.5 times in the current financial year, which decreases to 1.3 times after year three. EBITDA multiples over the same period fall from around 9 times to around 7 times, and that translates to around 8.3% compound revenue growth over this 2-year period, with 240 basis points increase in the average EBITDA margins.
All right, thank you so much for your time, Richard. I think it's been really helpful digesting all of that. So to our viewers, if you'd like to read Richard's full sector note, head over to our website, download the full piece. Otherwise, we've got the link in the description below, and please don't forget to like, comment, and subscribe. Every piece of engagement really does help. Otherwise, thank you, and we'll see you back here on Hardman Talks next time.